Good morning, good afternoon, wherever you are in the world. Welcome to another week of Punch Card Investing. Unfortunately, you've got your backup, far less skilled than Jack Duffley host again this week, but we'll make it work. And we've got an interesting topic. We're going to be talking Mini-Berkshire Hathaways. Of course, Berkshire's pretty well known for having a very, very good long-term track record with Warren Buffett at the helm, but it's we'll get into a few things with Berkshire. It's potentially maybe held back a little bit by its size, and you'd have to think that there's not a whole lot of runway left for the current management team. But we'll talk about that and whether you should maybe be considering some earlier in the journey, Berkshire Hathaway type companies, I guess. So if you've got any questions, pop those in the chat. We're going to talk about probably Markel, maybe one or two other companies. For, 20 minutes or so. We'll see how we go. And if there's any other topics you want to hear us talk about, let us know. So, Brad, I might throw it over to you first. You were just saying you've come off the back of quite an insightful Berkshire Hathaway podcast. Do you want to kick us off with that one?
Yeah, so it was from Invest Like the Best with, Patrick O'Shaughnessy. And it was Chris Bloomstrand talking about Berkshire Hathaway. The title was What Makes a Quality Company? And the guy has just an encyclopedic knowledge on Berkshire Hathaway. It's a really insightful podcast. I probably need to listen to it a few times. But he really gets into insurance and, how Berkshire was able to just create incredible returns over decades. And the float from their insurance side was a big part of that. He also talks about why, they probably wouldn't be nearly as successful today if they were starting out implementing that same strategy. So that was really fascinating to learn about. I'm going to share the link with you, Tom, in the private chat. Maybe you can post it. I'm not able to comment for some reason, but that is a fantastic episode. Markel, I haven't studied Markel really at all. The other one mentioned in the chat is Daily Journal being like a mini Berkshire. I was digging a little bit into when Daily Journal actually started operating as a holding company, when they started buying equity stakes in other businesses. And I think it was 2009. It was like right off the heels of the great financial crisis. Munger putting some of Daily Journal's assets into, I think it was two banks. He basically bottom ticked these two banks. So pretty impressive story there. But yeah, clearly there's a lot of interest in this topic, which is great. Mini Berkshire Hathaway. So, of course, everyone likes to call themselves a mini Berkshire Hathaway, right? To ride the coattails of Berkshire. But I mean, these are very rare type operations. So hopefully you guys can give me some insights into what you think is the next Berkshire in this talk tonight.
Yeah. Well, maybe we should do a quick whip around the four of us and just talk through what we actually think a mini Berkshire actually means, because we've mentioned a few companies there, and to me it seems like the key kind of idea is you've got, I guess for some people maybe they think it's just like a holding company that invests in a bunch of stuff. Other people maybe think you have to have that like float engine behind the scenes like a Markel or a Berkshire does. I don't know. What do you think, Frank?
I probably think of it a little bit more broadly. I don't think the insurance float has to be part of what makes a mini Berkshire, although that is a big part of what Berkshire Hathaway was. I'm also think of a conglomerate type business where they've got lots of different operating businesses that they own, whether it's wholly or fully or partly, and with a capital allocator that has that same long-term mindset as Warren Buffett, which I think is what makes a difference between some conglomerates and others, I guess. So it's ideal if they do have like an investment portfolio as well. I guess that makes it more similar to Berkshire Hathaway, but more so I think it's the approach of capital allocation, which I think there's a lot more companies around the world that could be compared to Berkshire if you look at it that way.
Yeah. How about you, Karan?
Yeah, I mean, I think it's a similar idea. I mean, you don't need to have an insurance company, because what I've at least understood from studying a lot of these businesses is that what's unique about Berkshire is the fact that majority of their insurance portfolio, investment portfolio, is in equities. But with a lot of the other companies, they are, I think, 1/3 into equities, but the rest are either in bonds or in cash. So it's the approach to capital allocation and the whole conglomerate structure. That's what you look for when you're looking for the mini Berkshires. Yeah.
Aren't many of them restricted from having much equity exposure? I'm curious
Yeah,
about
I
that.
think that's the mistake that Monish Pabrai made with
Yeah.
Dando Holdings when he tried to start his own mini Berkshire. He bought the insurance company and then found out that there was a lot of limitations around investing the float in stocks. And I think the fact that most of Berkshire's insurance operations, or a lot of them at least, are domiciled in Omaha or in, it might be Nebraska, I assume more broadly, that gives them a lot more flexibility, as far as I understand it, at least than other parts of the US.
And I think just the fact that they have so much cash, because that makes them a lot safer as an insurance company. They're able to invest a lot of that float into equities because they have that cushion.
Yeah.
I think even in the podcast, Brad, correct me if I'm wrong, like if it's this podcast or some other, but like he talks about how insurance is like a super difficult business to kind of survive in the long term.
Yep.
Was it this one or was it another one?
He mentioned that in this one, but I've heard that before as well.
Yeah.
Yeah.
So, I mean, Berkshire's been successful, but they also seem to be, like Charlie said that in the long term, he could see insurance being a very small portion of Berkshire, which is difficult to even imagine.
Yeah.
But if Charlie's saying that,
we should
probably
try
has
to imagine it. Yeah.
something better than us. Yeah.
Yeah. One thing that stands out as well is Buffett paid himself like $100,000 a year, basically the entire time that he's been running Berkshire. And so there's such alignment of incentive with passive investors in Berkshire with the CEO, and I think that's very rare. And to me, that's a critical thing of what would constitute a mini Berkshire. That same kind of alignment of incentives.
Yeah, it's because I think a lot of people treat Berkshire, and Buffett said this himself, they treat Berkshire as a savings account, or almost like they might a mutual fund or an index fund. And I think it's pretty well understood at this point that index funds work so well because, or at least one of the reasons they work so well is because the costs are so low. Whereas if you're in a hedge fund or something, can you pay 2 and 20, that can eat at the results quite a bit over time.
Right. Yeah, I was thinking about Pershing Square. What do they charge for fees? Is it 2 and 20 or 1 and 20?
1.6 and 16%, I think.
Okay, 1.6 and 16. Yeah.
How's that make you feel, Karan?
Well, I'm out of it, so.
Okay. Okay. Well, when you were in it.
But see, that's exactly what, like, everyone wants to be a mini Berkshire, but no one wants to, stick to the principles that Warren and Charlie kind of put forth.
Nobody wants to delay their financial rewards, right, off into the future.
There's just more justification. We're doing this because of so and so and so. But, it's difficult to stick to this true path of being a mini Berkshire.
Yeah, I mean, how many fund managers have a 0-6-25 structure, right? It's like Pabrai, maybe Guy Spear, I think. Does he have something like that? But I mean, you can probably count on one hand, maybe two hands, how many fund managers have taken that approach. So it's very difficult, especially if you're starting out because you want to get rich, right? You're not already rich, which most fund managers probably are starting out because they want to get rich. And, why would you have zero fixed fees if you want to get rich? It's a much slower route, and you actually have to produce, which is so hard to do in this business. So,
yeah, I believe Peterson may be in that bunch as well, but with very slightly different percentages. But I think he's in that group too. But there's not many.
Yeah.
I think a lot of the mini Berkshires, that story of there's people who are blindfolded and, looking at an elephant and they
Yeah.
keep touching different parts of the elephant. I feel the mini Berkshires are like that. Like each of them focus on one key aspect and then are trying to develop that. There are people who are focused on the insurance part. There are people who
Right.
are focused on, like, for example, Markel. There's people who are focused on durable businesses like Boston Omaha, but they don't have insurance, I think. And, there's all these copycats, but then it's just different aspects of the larger business. That's what they're just copying one aspect of it.
I think the decentralized nature of the business is a big part.
Yep.
Kind of having that capital allocator, making those decisions, and then letting the operators run the business the way they always have, which is less common, I think, once you get into these conglomerate type businesses, is people want complete control when it becomes more centralized, which is one thing Buffett's never really done too much of.
Yeah, it's hard to scale control, huh?
Yeah.
Yeah. And it's hard to trust and kind of let go and let, your companies do their thing. But that's really such a critical piece of Berkshire.
Yeah.
But let's get back to the mini Berkshires. I think Matt's right. We shouldn't be talking as much about Berkshire. Yeah.
Yeah. Well, question for you in that case, Karan, because I think you've recently put on a position in Berkshire. Any reason you haven't gone for a smaller company doing a similar type of thing like a Markel?
So no matter how you look at it, like Berkshire's, the reason to have Berkshire in the portfolio is not because you're looking to make a 2x or a 3x like quickly, right? You add it from a portfolio perspective because of downside protection. Generally, you want to stick to having businesses, like I think Berkshire is the largest owner of fixed assets in the world. That makes a lot of sense to have in an inflation sort of environment and in an environment where there's a lot of uncertainty moving forward. So having Berkshire as part of the portfolio is more so for downside protection, and makes more sense to have the real thing as opposed to the mini Berkshires or the clones, whatever you want to call them.
Do any of us actually have a Markel or something similar in our portfolios?
Mm-mm.
No, that's interesting.
I guess the closest thing I would have to a Berkshire type model is Tencent, which some people would disagree with strongly, I guess, but it is that model of having multiple operating businesses and then an investment portfolio as well. It's different in so many ways, but I think the overall structure is, I see Tencent as somewhat of a modern approach to what Berkshire Hathaway did a long time ago. The risks involved are obvious, so it's very different in a lot of ways, but that's probably the closest thing I guess I have.
Sort of a tech-focused Berkshire Hathaway.
Yeah.
Luis wants to know if there's any mini Berkshire in Australia.
Are they implying a certain company that I talk about too much?
Wasn't there that one investment manager who Charlie invested with? I'm blanking on the name, but I shared the link in the group. Forgot the name.
Yeah, it's not a public
You guys
company.
remember?
I don't know too much about it. Stone something from memory, but I know very little about that.
Yeah. So
Can't-
we've got a super chat with a very obscure amount of money, which I like.
Nice.
From Louise. Your opinion on what's Buffett and Munger's largest investing weakness? Also, what is one thing from Buffett we shouldn't clone or implement ourselves? Thanks. Who wants to take that?
Yeah, I'm happy to take it. Just quick thoughts would be, they have, it's not a weakness by them, but they're forced to invest in large companies, which is one thing I don't think we should do. I think you should take their approach and apply it to a more broader set of opportunities that they can just not invest in. So I think just straight up cloning them is an error in itself, because I'm sure Buffett wouldn't invest the way he does right now if he had a much smaller pool of capital. And then I guess it probably isn't a weakness, but their lack of focus on these newer type tech companies, I guess, could have been a mistake they've made in the past. Or that could go both ways. Maybe that's the best decision they made. So That's a tough one. But I think more so the size of the companies they invest in.
Anyone else want to have a crack at that?
I think Brad's saying something, but
He's muted.
There. Can you hear me?
We can
Yes.
now.
Even Ted and Todd, I think, they want to deploy about $1 billion at a time. So they're limited to companies, say 10 billion or greater in market cap. So still a fairly heavy restriction, even with the smaller managers in Berkshire. Tom, I sent you a link with the info about Munger's investment in Stonehouse recently in the private chat. Maybe you can paste that in the comments for people.
Sure. Yeah, and maybe just a last comment on this one. I think if you asked Warren and Charlie if they could like fix one weakness of themselves, as far as their investing, I think they'd probably ask for some like magical extension in their circle of competence. I guess similar to what Frank said. Like if they understood the online advertising business a lot earlier than they probably did after admitting like a big mistake not buying Google. I think that's probably a weakness. And one thing we shouldn't clone, probably their diet.
I was thinking that.
Yeah.
Well, it's worked out for them. They're both 90-something years old. Maybe we need to clone it.
But imagine if they'd just been on the paleo diet for the last 50 years, what they could be.
They probably would have keeled over at 60. I don't
maybe
know.
a lot less happy than they are. Yeah.
Yeah.
The Coke and C's candy is what got them through to 90, I think.
Hey.
Yeah.
Oh, we should all give it a try, I guess.
Yeah. There you go. I just thought I would share some long run returns on one of these mini Berkshires because I think Markel's probably the most well-known example.
Maybe Fairfax.
Fairfax.
Well,
Okay.
Sonoma is there too. Yeah.
We can pull up that one shortly. But this is the long run returns on Markel versus Berkshire back to 1987. And they're like unbelievably neck and neck, like very close in terms of their long run returns, which I was kind of surprised by actually. I would have thought that Markel would be growing faster, just considering that they're working off a much smaller capital base and they don't have this. They've got a larger investable universe than Berkshire has. But
do you know what that is
really
annualized,
close.
Tom, since 1987?
I don't. I'm sure we could do the maths, but not sure. And this is one of the things that's always stopped me from investing in something like Markel. Like certainly wouldn't rule it out. And I think actually Berkshire just bought some Markel recently, and Berkshire is Markel's biggest position, I think. So there's some like weird inception type stuff going on there. But one of the things that's always held me back is these theories of being able to invest in more stuff than Berkshire and grow a little faster just don't seem to be coming out in a lot of the data. Like Berkshire seems to have just kind of defied the laws of gravity and kind of kept trucking on upwards. And I think someone like Tom Gaynor, who's running Markel, would also admit that their strategy is slightly different. If you look at Markel's stock portfolio, it's much more diversified than Berkshire. He has a lot more of these kind of smaller tracking positions, and if he's buying something, he'll do it very slowly over a long period of time. And that was kind of written about in like Richer, Wiser, Happier. That's kind of like almost a personality trait of Tom Gaynor's. Whereas it wouldn't be that unusual to see Buffett like just absolutely load the boat out of nowhere in one particular stock, which I think would be pretty out of character for someone at Markel.
Yeah, from what I know, and it's not too much to be honest, Markel's a lot more conservative and more diversified in their portfolio. And just to answer your question, Brad, I looked at returns over the past 17 and a half years, compounded annually, and Markel's only 7.6%. So I assume that's underperformed the S&P 500. But there's probably a dividend attached to that. I have no idea. I'm just assuming they might.
I don't think so.
Markel pays a dividend.
Okay, well, I would say that's probably underperformed over the past 17 years, whereas I might just double check Berkshire before I assume they outperformed. They might not have either.
I think they are slightly ahead. It depends on the time frame you're looking at.
Yeah.
So time frame, the same time frame, 17.5 years, 9.4% for Berkshire Hathaway. So they've outperformed Markel for the last 17 years, which, considering the size, is probably not a good thing for Markel. Like Tom said, but that smaller capital, just size overall, they should be able to grow quicker theoretically, but hasn't been the case.
Yeah, like, I mean, Berkshire's market cap, looking here, is 660 billion now versus Markel at 17. So pretty serious size difference.
Yeah, I guess one thing Berkshire has going for it is, it seems like they're the guys that people go to when they're in trouble, right? If there's like a market crash, somebody needs, life support, they're going to give great terms to Berkshire Hathaway just to kind of bail them out. And I don't know how much Berkshire's recent returns have been a result of being in that position, but I think it would be interesting to kind of parse that out.
Yeah, and you would think if there's like a large private business owner looking to sell, they'd probably prefer to sell to Warren than to Tom Gaynor. I don't know. Seems like a cooler story to tell. I wonder if that plays into it. We do have an interesting question here from John on Constellation Software. This is not one that came to mind for me when we were thinking Mini-Berkshires, but any hot takes on that one?
Brad, weren't you into Constellation at one point? Or were you just looking into it?
Yeah, I looked at it a little bit. I couldn't quite wrap my head around it. But yeah, I mean, people call it sort of a Berkshire in the tech space in Canada. So, but I don't know enough about it.
I think there's some similarities, I guess, with the capital allocator at the top there. I'm blanking on his name. Someone Leonard, Mark Leonard, I think is his name.
Mark Leonard, yeah.
Very long-term orientated, great capital allocator.
Mm-hmm.
So I guess they share similarities in that way with Buffett, but it's more of a roll-up of these smaller, much smaller companies, like a lot of acquisitions taking place every single year. So there's definitely some key differences there.
Yeah.
But nonetheless, a great company with a great capital allocator. So.
I guess, again, you're unlikely to see Constellation like pivot into buying a railroad or something. Like it's very focused in one industry. And that seems to be, as far as I understand it with Constellation, that seems to be becoming more of an issue, is there's just a lot more competition for deals. I'm sure Berkshire and Markel have the same issue, but when you're concentrated in one industry, you would think that gets tough more quickly.
I wonder, does Constellation have a public equity portfolio, or do they just acquire companies? I thought maybe it was more just on the acquiring end.
I think mostly just through acquisitions. Yeah, some of those companies they acquire are public, but yeah.
Cool. Any more thoughts on Mini-Berkshires that you guys are keen to share, or should we get into some questions?
Happy to take some questions if we've got any coming through.
Yeah, let's look at the questions.
Any there initially you want to have a go at?
Let's see. Are Mini-Berkshires run by mini Buffetts and mini Mungers?
Where's that one?
Yeah, you see those two bobbleheads in Tom's videos, like they run companies, yeah.
That one's near the top.
Okay.
It's a great question, Manu.
I think that's more of what I'm looking for, is a mini Buffett or a mini Munger. I think I don't want to clone the business structure of Berkshire with what I'm looking for, but I do want a capital allocator that's Buffett-like, I guess. So yeah, I guess I'm looking more for a tiny Buffett or whatever he said there, more so than a mini Berkshire.
Yeah, so Bostonoma actually fits that, right? Because it's technically Warren Buffett's grandson or something. So he's literally like a mini Warren.
It's Warren Buffett's sister's grandson. So
sister's grandson. Okay.
Yeah.
Have you Frank, have you checked out the 50X podcast? That might be a good place to find one of these mini Buffetts.
No, I saw you share that. I did follow the podcast, but I haven't listened to any yet. No.
Yeah. Check that out if you guys are interested in compounders.
What do you guys think of this particular compounder? Oh,
Which one?
Shows.
Oh boy. Controversial.
If Kavana doesn't go bankrupt, then yes, it probably does outperform. But they're fighting a clock with bankruptcy, so could be right. It's a risk that I wouldn't take, but suit yourself.
I mean, Jason's been very happy with them, so I mean, there's a data point for you.
Yeah.
We only get about 10 comments every live session from Jason on Carvana, so
He's pumping.
it needs all the help it can get. So
Yeah.
I can take this one because this is another company that we don't talk about enough.
Oh no, never. Which
How
company?
How is Thor like a mini book? What?
There actually are quite a few similarities. Mainly, did I just?
Brad didn't
Brad
like that. Like Brad's like.
I think
"No."
that I think I actually did that to Brad. Sorry, I clicked on your face and you like fell off the screen. See, that's what happens when we don't have Jack. No, I was just going to say the main similarity here is just a lot of the earnings are retained to make acquisitions, and they run a decentralized management structure. Basically, they have very small headquarters. Largely let the CEOs lead their own lives. There's some stuff that's centralized. I guess like they have electrification initiatives that are centralized. They sort of buy chassis and that sort of thing in kind of from head office. I think a lot of that purchasing's done there, but largely it's decentralized, and the subsidiaries actually kind of compete against each other to a reasonable degree as well. So there you go.
So this is interesting.
Questions?
From 736, that's going to be a different number for you guys in the southern hemisphere.
Something with a 36. Hang on.
Yeah, that's it. The 32
32.
should be the same. Berkshire borrowed money at lower rates than the U.S. government, according to Chris Myers, 100 baggers. What do you guys know about that?
Yeah, I think that's a very good point. That's basically getting at their insurance float, really.
Mm-hmm.
They have an insurance company with a combined ratio under 100, which means it's profitable. When the combined ratio is above 100, they're losing money, and it's not flat every year. Like Berkshire actually had a lot of trouble having a profitable insurance company for a while there in some of the early days. But yeah, effectively, if you're making 2% or something on your insurance businesses, and then you're investing that float at 20% like Buffett was, then that maths works pretty well.
Yeah.
And I think that's probably one of the reasons why a lot of people have tried to replicate it. But like Bloomstrand and like Munger have said a lot of times that insurance isn't that easy a business to run. Like it looks really nice from the outside looking in to have this great cheap float from Berkshire, but there were periods of time where if the insurance premiums and stuff that Berkshire could write, the rates just didn't make sense on it. They wouldn't do business. And since they had these other subsidiaries and they had a stock portfolio and stuff, they were reasonably comfortable just shrinking their insurance operations way down when prices didn't make sense and people were writing unattractive business and getting overly exuberant. And then they can do the opposite kind of as they come out of that.
Right. But if all you're doing is insurance, like how many insurance companies are going to take that approach, right? Not right.
Yeah.
But right.
Yeah. If you're a big insurance company and that's all you do, it's going to be pretty difficult, even if it's probably the right thing to do, to like shrink your business when prices aren't attractive.
Yeah.
But Berkshire could do it. That's another interesting one. They actually did borrow money in a more traditional sense, very cheaply in Japan. And I think Europe, it might have been where it was actually 0%. Japan, I want to say, was like not quite there, but certainly under.
I think Japan was 0% yen
Japan
bonds.
was 0.
Yeah.
Okay,
Yeah.
that's crazy. That was
That's
to
when they
do
were
with
banking
the
the 5 companies.
exactly.
Yeah. You did a video on that, I remember.
I did. Yeah, that was a couple of years
Yeah.
back now, I think. Yeah.
Yeah.
He was getting like a 5% dividend out the gate or something, and funded it all with 0% money. That maths also works well.
So how does that work with currency risk? I'm just trying to make sense.
Well, I think that's one of the reasons he probably did it, is to hedge the currency exposure. You know, he's getting paid dividends in yen, and then having to pay the debt back in yen. So it works a little nicer or it takes away the risk versus if he borrowed US dollars at 0% and then converted it to yen and invested in these Japanese companies.
Gotcha.
Yeah. That's a change of topic. Do we have a date yet for the 2023 Punch Card Conference?
Oh, wow.
What are you guys thinking?
To be announced.
I think we have to launch the SPAC first, don't we? Then we can have a conference.
Maybe we need to make a Mini-Berkshire ourselves.
Yeah, exactly. Yeah, when we launch a SPAC or buy an insurance company or something, maybe we'll host a conference.
Jason, if you can fund the travel for everyone, we'll get a conference happening wherever you would like it.
Shoot,
I don't know about wherever.
Oklahoma, is that where he is?
Yeah, he's in Oklahoma City, I believe.
Gotcha. Okay, it's going to be very Berkshire-esque.
Yeah, I think Jason sent Jack a full sort of business plan on a Punch Card Conference and how we could do it. So maybe we should take a closer look at that.
We got a comment. Karan is letting the beard grow. He's going to catch up to us soon, so look out.
Is that true, Karan?
I don't know. I've been shaving like every other day, so.
This is the 5 o'clock shadow, I guess.
Yeah, just can't hold it back.
No.
There has been a lot of questions coming through about Kelly Partners Group, and I think someone even mentioned a podcast. There's a new Brett Kelly podcast with Owen. I'm blanking on his name. I think it's called the Australian Investors Podcast, though. Owen Rask is his name. But it's a really good interview. It's typical Brett Kelly style, where he can ramble on into 75 different stories at once, and Owen doesn't get much of a word in. Tom, I'm sure you remember that from the line at Berkshire, and when I've talked to him on Zoom, you don't get to say much, but he has a lot of good things to say at the same time. So I recommend listening to anyone interested.
Yep, I was actually texting Brett yesterday to figure out a podcast date, so I might have to contend with that soon.
Get ready to do a lot of listening.
We'll see how it go. I don't mind doing that in podcasts, to be honest, as long as it's not too far off the beaten path. Yeah.
Tom's had a little experience with that.
Yeah.
Guy likes to take control.
Oh, he's another one that does that, isn't he?
Yeah. What else we got?
If you have any questions, feel free to put them in now. Give us some topics.
This is actually a Mini-Berkshire / Buffett we'd forgotten all about. Karan, I'd like to hear your thoughts on this particular capital allocator.
Oh boy.
Is he not the GOAT?
I mean, yeah. You guys remember when Chris Bloomston like absolutely ripped him apart?
Oh, yeah.
He's
Been
given
very
not much
quiet
time
out to Matt.
since then, right?
I remember the memes about that. The Grim Reaper, was Shema, a few other guys. Maybe Kathy Wood was next. It's pretty good.
Yeah,
I feel like the market hasn't bottomed until like ARK starts to sink, So
Yeah. That was one of the more entertaining tweet threads I've read from Bloomstrand.
Yeah, he really spent some time on that, didn't he?
That guy's an animal.
I mean, he couldn't count. Like, he's like, yeah, this is our 10-year return, and he gave like 9 years. I mean, right off the bat, like,
Yeah, maybe a little red flag.
Yeah.
Oh, I didn't know. It was Eddie trying to be the next Berkshire with Sears.
Was he?
That's what John
Oh.
said.
was he?
You never
Clearly,
know what
that
he was
hasn't played
thinking.
out.
Mm.
There's so many people who've been labeled like mini Buffett or baby Buffett or whatever. Like, Bill Ackman was one, Eddie Lampert was another.
Yeah.
Yeah. I think usually as soon as that happens, it starts going south for them. As far
It's like
as
when people think they can do no wrong, everything goes wrong.
The world teaches them a lesson, right? It reminds me of Amazons. You hear the Amazon of this and the Amazon of that. It's like, probably should just buy Amazon when you start hearing stuff like that.
Yeah. Fair. Here's an interesting one from Louise. What do you think the Berkshire meetings will be like after the Buffett Munger era is over?
That's a good question.
Quiet. Sure. Maybe it stays as a way to get everyone together. I think I've never been, obviously, but I think part of the appeal is that a lot of investors from around the States get together, or around the world even. So maybe it keeps some of its legs just because of that factor. But I think less people will be keen to listen to Ted, Todd, and whoever else rather than Buffett and Munger. It won't be the same thing, that's for sure.
Yeah, I think it'll still be an important event for a lot of people to attend, but I agree there's not going to be like a buzz about watching the actual, Q&A. Maybe
Super chat.
Who knows? Like, it might be as good. It's possible.
Could be.
You can't discount like Greg Abel or like any of the other managers. I mean, Ajit Jain. Yeah. Those are the people who will be answering the questions. So they'll bring their own style, their own approach to things. And who knows? It might be better or better in some aspects. Yeah.
Yeah.
I could... Go ahead.
Sorry. I was just going to say they might get through some more questions. Talk a bit faster.
You got a super chat also. Yeah.
Okay. Let's get to that. I was gonna say I could see it still doing pretty well and attracting a lot of people if they get Ted and Todd up there consistently, because we really don't hear a lot from those guys.
That's true.
That'd be cool.
Yeah, it would.
Got a super chat from
Super chat.
Palm. Do we have a question? I'm not seeing any question, just the super chat. But if you do
Just
have a
a little
question,
tip.
drop it in the chat.
Thank you, Parm.
Oh, we've how long have we been going for? 38 minutes, and now the flood of Alibaba comments has arrived. You guys have any thoughts to share on Alibaba? We had some more news about a potential delisting today. I must say I haven't had a chance to dig into it super deep.
The same news we get every 6 months on repeat, it seems like.
Pretty much. Well, 6 months ago it was that they were actually going to work together, China and the US, and delisting was over, wasn't it? Remember that? It went up like 50% in a day.
That's part of the cycle. We'll get that again soon.
Yeah. We've just entered a fresh bear market and we'll bottom.
I'm telling you, they just wanted to do more share buybacks. So that's why they start putting out these this news. Do the buybacks, and then again, everything's great.
Okay.
Interesting strategy.
Yeah.
And we had an Alibaba annual report come out. I believe earnings in a week or so.
It's what 4th August, right? Is it?
That sounds about right. Yeah. We maybe should we do a dedicated Baba earnings video in a couple of weeks?
We should. Yeah.
It probably needs a video because there's a lot of things happening. Even with the Ant Group, and Jack Ma stepping back, all of those things. The extra listing on, I'm forgetting the exchange, but the one in China. Yeah, there's a lot going on. And once the earnings are out, I think that would be a good video.
Yeah, sounds good.
What, the South Connect thing? Is that what you're talking about?
The additional listing. So some
the primary
personal
listing.
Yeah.
Yeah.
But just a lot of little things happening, leading to a volatile share price as usual.
Yeah. Well, let's do one.
Isn't it supposed to be a good thing that Jack Ma's kind of giving up control slightly, so they're creating distance, so they're able to list? Isn't all of this a good thing? Like, that's how I interpreted the news, but clearly the stock was not reflective of that. What do you guys think about that?
Yeah, because originally the share price went up pretty significantly because they said they could do the listing again. And then the opposite happened once we seen Jack Ma step back. But I think that's probably because to get this listing to go ahead, he needed to do that. But I don't have a really good opinion on that.
Yeah, it's all very political.
Welcome to investing in China.
Yeah, exactly. Right. If you got any non-Alibaba questions, we'll save our full thoughts for a couple of weeks, but drop them in the chat.
Save them up.
Save them up. Yeah. Brew on them for a couple of weeks and then make them as difficult as possible for us then.
That's it.
It's going to be the way to go.
Matt H just had a good question.
That the one?
Yep.
Is that it?
Yeah, any countries you would avoid investing in? If the price was right, would you bite the bullet? I remember reading sleep investing in companies in Zimbabwe. He also had, I think, Thailand or Indonesian investments as well. Yeah, I have some markets I would avoid, but there's always certain things that can make me break those rules, like Turkey, just because of inflation and lack of understanding the country. I think language can always be a barrier as well. So there are some markets I would avoid, but I try to remain open to anything. I know in the past I probably would have said I never would have invested in China, and I have. So, yeah, I try to remain open, but there's some things that probably rightfully should stop you from investing in some markets. And yeah.
Anyone else?
Yeah, I don't invest in North Korea. I just want to put that out.
Come on.
Well,
never say never.
Never say never. Not yet. Haven't found the right thing.
Yeah, jeez. Still looking, still turning over rocks. Man.
Are we going to get demonetized for that, or?
Oh boy.
Like, there's markets like Russia that would be. Here we go. The demonetization continues.
You can't buy Russian shares anymore, right? I think
I think that might be the case at the moment, but I wouldn't even buy a company with exposure to Russia at the moment. Like, it's just too much risk involved. Maybe it's so incredibly cheap that it's worth taking a little bit of risk. That depends on your strategy. I don't really know. But it always changes what markets I would invest in. Like, yeah. But language is the main barrier for me. If I'm struggling to find good information that I can read and access easily, then I think I'd be very hesitant, which was a problem I've had with an Israeli company in the past. But yeah.
We had a question from Matt Hansen. Thought you were moving to Oregon. So I just made an offer on a house this morning. And
cool.
It sounds like it's going to be accepted. So I'm a mini Jack Duffley, which feels really good. And I think, Tom, did you just buy a house?
Yeah, well, this week.
Dude, what is happening? We might have to retool here at the Punch Card show. Make it a real estate podcast.
Yeah. Yeah,
No,
I'm trying to tick off 20 real estate punches. That first one down, you know.
Good.
Jack's been, teaching us, the way.
Yeah. Unless we count Heritage, I guess that's 2. I don't know.
There you go. There you go.
I should do the maths on how many square feet of Heritage I own. Of Heritage properties I own.
Right.
I did that a while back. That's always an interesting exercise, actually, to see like what percentage of a company do you really own, and usually there's a lot of 0.000s. If it's a big company.
0.000 square feet.
Yeah.
It wasn't that.
Yeah. But
Tom, you got a question. Any update on implementing Peterson's option strategy?
where's that question? Well,
What's happening in the chat?
whoa. Hang on a minute. Put user in timeout as an option here on StreamYard. I think that might be deserved.
That might help.
Or do we go block user? Those are my 2 options.
Block.
Yeah,
Block would be good.
Oh, hang on. Block user. There we go.
Did we get an OnlyFans invite? What did I miss down there?
Lovechat.xyz heart emoji best adult dating site was blocked.
We've officially made it. We've got some spam bots in the chat. We've finally made it.
We got to talk to Elon about this.
Yeah, I think it's that NK reference.
Yeah, that's what I was thinking too.
Yeah. There we go. No, Peterson option strategy. No update worth sharing there from me. Yeah, when I have one, I might make a video on it. It'll probably be quite New Zealand specific, actually, just because the main holdup really is me needing to understand the tax implications over here with that. So I don't know. Maybe I'll try and convince my accountant to do a collab on YouTube and drag them on.
You guys have an options exchange over there in New Zealand? I'm guessing not. What about Australia?
No. Well, there would be something in Australia. I've never looked into it, but I think you can just use something like Interactive Brokers, maybe. But I don't know. Is the real answer?
Yeah. There's no big options exchange here. I believe like 10 or 15 years ago, it was like big news that 3 companies on the NZX had options available. And I don't think those exist anymore. Maybe they do with very, very small volumes. And I have heard that there's like some New Zealand companies that might be listed, say, over the counter in the US or something, and there'll be an options market there, but not necessarily in New Zealand. I assume it's similar for some Australian companies as well.
Someone's comment just made me laugh. Steve, after we got that bot come in, that's what you get for mentioning Russia.
Yeah.
Oh, good. It was Russia. It wasn't what I said.
Okay.
And just to follow up from the question earlier about different markets, Tristan asked about Poland, which is a market that's very cheap, looking at surface level, I guess. But another one where I would have like the language barrier. There's some companies that have English investor relation pages, and you can just translate them through Google or something as well. But it is that extra barrier to find out information about a company when there's a language difference, I guess. And then there was a follow-up about Germany as well. Just being near Russia, I guess, and having these political risks and energy problems tied to it. They're not markets I would avoid completely if the right company came along. But yeah, sometimes there's things like this that create opportunities. So you do have to look at the risk reward, I guess.
So Doug mentioned, don't sleep on Markel Ventures. You guys know anything about Markel Ventures?
Zero.
Yeah, I believe that's like their private equity type. But yeah, not a lot with it.
I wonder what kind of stuff they're investing in there.
Yeah. All I've really heard about, I hope I'm not getting that mixed up, but all I've really heard Markel say about investing in some of their private businesses is they've found the odd interesting thing to do, but price is very high, similar to a lot of the stuff we've heard out of Berkshire over the past few years. Any other questions you guys want to have a go at there? I can maybe answer this A2 Milk one, because that's another company we don't talk about that much.
You haven't made an update about A2 Milk for a while. Yeah.
I haven't, no. Yeah, it's a little tricky with some of these companies because, I mean, New Zealand businesses only report earnings twice a year, so there hasn't been a lot of data come out. And I think we are due for, I want to say, the full financial year update in the next couple of weeks. So there should be some interesting updates there. I have seen some data about some of their core markets. They launched a new English label branding pretty recently, which seems to be going well. It's a bit of a weird thing, kind of side thing, but the New Zealand dollar is like exceptionally weak at the moment, so that might be a shortish term tailwind for them. And they were, I think, one of the top 10 best-selling products in a big kind of actually, I might have to go back and check that. Possibly it was food products, but they had a very successful day on one of the JD.com like sales events as well. So that's all kind of interesting stuff. But yeah, we haven't seen any big updates there for a while.
There was a request to post the Brett Kelly podcast link. Maybe, Frank, you can dig that up.
I'll have a look.
Tom, people were really hoping for that Li Lu Q&A. It was very disappointing.
Yeah, I maybe I'm just very unclear with the way that I write things. I don't know what it is. Did you guys think I was doing a Li Lu Q&A when you saw that?
No.
I thought Lilu was doing Q&A with you. Like that's.
Okay.
Yeah.
No, I did not get the chance to do a Q&A with Li Lu, but maybe one day. You never know.
Yeah.
Maybe I'll next time one of those job ads go up, I'll see if I can get an interview and I'll record it and start asking him questions. Anyway,
Get a link for that Brett Kelly podcast in chat if anyone's interested.
You put it in the public chat?
Yeah, I put it through YouTube, so hopefully that works.
Cool.
We've got 13 Fs coming out in like 2 weeks, right?
Yeah.
Mm.
Yep.
Who are you
Should
guys
be an
most
interesting
excited
one.
to see?
Are you guys expecting anything? Any thoughts on 13F's potential?
I'm expecting a lot more oil in the Berkshire portfolio. That's about it.
Bit more Oxy, you reckon?
Yeah.
They own like what 20 plus, well 6% because of the warrants. I think they're at
Something
25,
like
26%. Yeah.
Mm-hmm. He just doesn't stop buying it. Yeah. Part of me wonders whether they'll buy the whole thing, but not sure. It would be a pretty interesting, like, own forever business for Berkshire to buy a big oil company. But you never know.
It complements the Berkshire Hathaway energy thing, so it makes sense there in a way.
Yeah, possibly. I don't know. We're I don't know enough about Oxy to comment much on that. But it'll be interesting to see that. I wonder whether we'll see some smaller oil companies down the Ted and Todd end of the portfolio as well. They've been in Suncor, I think, before, in and out of it a few times over the years.
Luis asked thoughts on investing in India. Have any of you guys looked at anything in India recently?
Nope.
Quran, right?
Pretty much the same as investing anywhere else. I mean, if it makes sense to you, then do it.
Yeah.
The one comment I can make about India is a lot of the companies are owned by founders. So, it's very common to see like a 60-70% founder controlled business. You got to be careful there. That's a huge thing because I've made a mistake in the past. So that's something to definitely look into. And the company I made a mistake with was Vedanta because the founder essentially tried to buy out, like delist the company because the price got low enough. So that's always a risk with Indian companies. So yeah.
Super chat. Is this a world record super chat, guys?
I was going to say biggest super chat ever, I think. Big spender.
Oh, Lord.
Yeah.
An episode on Turkey. Everyone is pretty quiet about Monish's new Turkish holdings, probably because Monish has been quiet as well. More people should talk about them.
Eunice is always in here pumping turkey, isn't he?
Somebody's got to, other than Monish.
Yeah.
Yeah, I don't think that'd be an okay episode. Maybe if we expanded that to more emerging markets or something like that. There's only so much we could say on Turkey, or at least I'm pretty hard and fast no on Turkey. But
has anyone looked at it? I think it's in an airport, if I'm remembering correctly.
The Monish holding, I'm not sure.
Okay.
Didn't we pull it up last week, or am I?
Yeah, we did. Yeah.
Okay.
But yeah, I think we all just put in the too hard basket. We should probably actually spend more time on it.
Well, Eunice should make a video about it, and he can educate us.
Yeah, maybe we should get him on Punch Card at some point.
Yeah,
I don't know.
He just had a comment. Sorry, go ahead, Tom.
I was going to say we could get Eunice and Matt to just do an episode one week.
You can just have the Punch Card conference in Turkey. I think that would be a lot more fun.
Yeah, okay. Keep
Have the
costs
boss
low.
players in the background.
I've heard Turkey's pretty cheap. Anyway,
He just
thank you
said
for
that
the super chat.
he is Turkish. So I guess when you're from a country, you understand it a lot better than any of us would. So it's much more reasonable to take that risk in a market like that when you understand it properly. I think, any market that's not kind of westernized at least, or it takes a lot of work to try and understand it. So, yeah, especially with these emerging markets where there's so many huge differences between most Western markets, I think it's complicated. And then you add on the highest rates of inflation that any country's really seen in a long time. So there's a lot to think about in Turkey.
A couple of years in the US might be there. With inflation. No? That'd be scary.
They're pretty much following
take-
the Turkish playbook, right? You know, pump money in when inflation is super high, keep interest rates low. Like, it's a Turkey playbook, yeah.
Exactly.
Did you guys see Ackman's rant about interest rates? I mean, I know he's made many rants, but like, you know, like the
Twitter?
recent one, like, yeah.
Give us
that,
the summary.
yeah, he thinks that rates should be at 4% for a sustained time period, and like the 2 to 3% that they're targeting is completely unsustainable. I mean, it makes sense, I guess, but
Yeah.
I wonder what little position he's put on to benefit from that.
Tom, do you know if Mitch is still on his TLT short, or is he?
I believe he's almost all the way out of it.
Oh, nice. Okay.
Or was
He timed it perfectly, didn't he?
pretty close, yeah. Not long after I had Mitch and Cass on the podcast, it went against them a little bit, but the overall result was still like very good.
I think he said it got to about half of the portfolio, and then they weighted it back to around 5 or 10%, which is the original sizing of their position.
Yeah, so they got, 80% or so out of it. Something like that.
So Michael asks, would any of you invest in a country-specific ETF? You did that, right, Karan? You want to share anything about that?
Yeah, so KWeb is what I chose to allocate. Chinese internet companies, just a basket bet, basically. Yeah.
Nice.
And
is there any? How are you thinking about monitoring that position? Because I guess it's not like if it shoots up a lot, how do you think about it getting to a valuation where you might reassess the position? Is it digging into some of the component companies, or what's kind of going through your head there?
So it's more so like, I mean, we've seen everything get crushed recently. So rather than allocating more and more into Process or Alibaba, it's because the broker that I'm invested in, there's certain other reasons that I can't buy more of Berkshire. Of Alibaba, because it would put off other parameters that might affect something else. So rather than buying into Alibaba directly, because I have that limitation, that's the only reason I'm buying KWeb. Otherwise, I wouldn't be investing in KWeb. Yeah.
Interesting.
I personally probably wouldn't do it unless I was trying to be more defensive with my investments, I guess. I think if you're trying to outperform the market, which is hard enough to do, the more you diversify into an ETF or something, the less likely that is, obviously. But yeah, I personally wouldn't. Maybe when I'm older and I'm trying to be more defensive and conservative, I guess, then I would think about ETFs again. But for now, no.
Yeah, when you get to Karan's age, I mean, ETFs make a lot of sense.
Yeah. I have a pretty similar view. The KWeb one is interesting. I think that might be one of the rare situations where I'd do something like that.
I would not recommend it though. Definitely, like I would.
You'd prefer to pick
look at
the
selling
individual companies.
Absolutely, yeah.
Yeah.
It's a lot less risky because I mean, at least your portfolio is being affected by that particular company. With KWeb, you've got like 50 positions in there. Everything's affecting everything else. So,
yeah. Is KWeb like a market cap weighted index? So it's got higher proportions in the bigger Chinese companies, like an S&P 500 would.
So I mean, it's specific to. I think they have some proprietary way that they allocate which companies go in, because I know DD is one company that for some reason did not get through the filters, and they kind of dodged a bullet there. But I think there are certain criteria how they include a company in, and even in terms of the weighting, there's just 50 holdings in there. So I think like 10% of the portfolio is in Tencent or something huge like that, like 8% in Alibaba or JD.com and so on and so forth. So
Gotcha.
I'm not sure if it's completely market cap weighted or if it's like a bit of, active sort of investing. But yeah, it's relatively more concentrated than other ETFs. That's one thing.
Yeah, seeing the first two at more than 10% is kind of surprising. Tencent and Alibaba.
That would make sense with market cap weighting though. So
yeah.
Tom, can we get the pronunciation on that recent comment, please? From
Liam Labuschagne. Hello from Tiawamutu. There you go. I'm not sure if you meant Labuschagne or Tiawamutu, but
either one.
Yeah, there you go.
Just looking at words I can't read.
Yeah, I believe Liam has a YouTube channel. People should go check that out.
He's doing it right too. That's a niche market right there.
Very much so. Right, should we take one or two last questions?
Yeah,
sure.
Let's do it.
Any guys want to pick out?
Yeah, I want to address Matt's thing. It's not wealth preservation yet. Not even close. Yeah.
That was a joke, guys. He's not that old.
Yeah. So you're telling me you're not dyeing your hair yet, Karan?
Sorry?
So you're not dyeing your hair yet? That's all natural? Yeah, okay. Right, what else? People want a real estate podcast, it looks like.
Wow.
I think a real estate show is in order, Everyone's buying houses.
Yeah.
Yeah. Well, is that going to be, fingers crossed that yours goes through as well, Brad, but that'll be 3 of us in about a month have bought something.
It's pretty wild.
Yeah.
Yeah.
Maybe we should do one of those. It'll be interesting to kind of talk through some of maybe the country differences as well. I guess you and Jack are probably going to be reasonably similar with structuring debt and that sort of stuff. But
yeah, but I'm sure there are differences.
Yeah.
Super chat.
Ooh,
I like this question.
Spin-off.
Christopher. Y'all looking at any special situations?
Hey, this guy's speaking my language. Y'all?
Yeah.
Nice.
Yeah.
Anyone?
Are you guys looking at any special situations?
I'm sure Frank is.
There's nothing specific that stands out. The most things I've looked at recently, I guess, down the special situation path is like merger arbitrage. I thought about Activision more and more. I thought about Twitter, but not really. No spin-offs, to be specific, like he asked. But yeah, I always like to read about a good special situation. There's nothing that really stands out at the moment, though. A lot of merger arbitrage kind of going on. Whether or not I would do that, I don't know yet, but there is some interesting things out there.
You guys follow any spin-off specific services where, new spin-offs are announced or anything like that?
Just a special situations. It's called Special Situation Investments. Broader than just spin-offs, obviously. Yeah, I guess it's a newsletter. More of it goes in a little bit more than a newsletter would. Like they track a portfolio, they show you their returns, they provide regular updates on their kind of ideas. But yeah, they operate a little bit like a newsletter, so that's one I definitely recommend.
I want to give Christopher some ideas that at least I've been looking at. One would be the IBM company, the IBM spinoff recently. That's a great spinoff to look into. It's called Kyndryl. I'm probably pronouncing it incorrectly, but that's a very interesting spinoff that you can check out. Warner Brothers Discovery spinoff situation still going on. That's quite interesting. There's Bosch Health, where they've spun out Bosch and Lomb. They control like 80%. That's another interesting situation. Yeah. Lots of good spin-offs out there right now. Porsche has another spin-off that's coming up in September. They expect the spin-off to be worth as much as the parent company. So that's something to look forward to.
It's Volkswagen, right, that owns Porsche? Yeah.
And recently the CEO has been replaced. So the CEO of Porsche is now the CEO of Volkswagen. So
wow,
interesting stuff. And plus they've bought out like 50% of Red Bull in F1. So that's also like an interesting thing if you're into F1. Yeah. Lots of good stuff happening in this space.
Karan, value add, nice.
Yeah, and these aren't spin-offs exactly, but they're a couple of special situations I'm looking at. I need to spend more time on the countryside partnerships, the Norbert Liu investment. So they're selling a, low return on capital business over time and funneling it basically into buybacks. So that's kind of an interesting situation that probably warrants a bit more digging. For anyone down under, ANZ Bank are actually doing a relatively minor acquisition, really. I don't think it's that interesting taking an initial look at it, but it might be something worth digging into. ANZ are acquiring, I believe it's Suncorp, one of their lending businesses, and there's like a rights offering involved in that, which is interesting if people want to understand how that's generally structured in Australia and New Zealand. So that's a couple that might be worth looking at. I believe we had another super chat. I've just gone past.
Punch
so Matt, Punch Card Conference Fund.
Starting to tally up. Get those flights ready, fellas.
Yeah, absolutely.
Thanks,
all right,
Matt.
should we wrap it up there? Any last questions we want to take? Thank you for your super chat, Matt.
Thank you, Matt. Yeah.
Cool. What does Jack usually say when we get to this point?
He says a lot of really smart sounding things.
Yeah, he does. I think he says something like
Share site.
I've got great hair.
Share
Share site.
site.
Yeah, no. Yeah, he says something about share site. Check that out in the description below. Give us a thumbs up. I'm not sure that I can see the thumbs up count on the live stream in StreamYard here while we're live, but if you guys could pump those numbers up for the algorithm, that would be great. Any topic suggestions, let us know. We always get off these live streams and kind of rack our brains for new topic ideas, and that's often somewhat challenging. So then we tend to sort of divert into, Chicago geography, I think was the topic last week after the show, and Jack was kind of showing us the dodgy areas of Chicago and where the good areas are and all that sort of thing. So topics would be useful. I think that's about all we've got. So thanks for watching. We'll see you guys next week.